Hey guys, good morning. My name's Jonathan Reich. I'm a licensed CPA in the state of Louisiana, and today I want to talk to y'all about something that is kind of boring, but super important if you're thinking about starting a business or getting your financials in order for your tax preparer and this is your first year doing it. Normally I'll have like a software or something I want to showcase. I will try and walk through something, and I'm going to today, but I wanted to talk and have full attention on me for a second before I minimize myself and get in a window and showcase what I want to walk through today. So what am I talking about? I'm talking about chart of accounts. So if you're not an accountant, if you're not a finance major, you probably don't know what that is. Your chart of accounts is how you set up your financials for your business. If you're running a profit and loss, your profit and loss, if you're in the service sector, maybe you're a house cleaning company, for instance, it's going to look a lot different than a P&L for a company that is maybe in construction. For instance, your profit and loss, if you're that house cleaning company, is probably going to have things like chemical supplies expense. A construction company may have that, but probably not. Other things that a construction company expense, they might have equipment repairs on their profit and loss, for instance. You can have that on your cleaning company, but the construction company may have a few $100,000 a year in that profit and loss account, whereas you might have a few thousand. Maybe you're repairing, your steam cleaner or something like that. And so with that, the same can be said for balance sheet accounts. So balance sheet accounts, you're going to have your different assets and liabilities, and I'm going to walk through that in a second, and then you'll have your equity accounts. A lot of accounting platforms will have standardized accounts for your balance sheet. It'll always start with your bank account, your accounts receivable, your current assets, your long-term assets, your property, plant, and equipment. Then it'll drop down to your liabilities. What's your accounts payable? What's your loans payable? What are the things like credit cards payable? Do you have any long-term loans associated with equipment or trucks or something like that? They're all sort of standardized, but not always. And so each business is going to require a hint of customization. Each business is going to kind of tailor it to how they run their operations, if they have branches, how they want to display data and categories. And so it can be a little overwhelming if you've never dabbled within something like this. So I kind of want to walk through how to make it easy from the get-go. I'm going to be using digits today to kind of walk through that. I'm going to start by showing a balance sheet and a profit and loss. And we'll talk about the default categories, subcategories, how to update these, and then how we want to basically display this on a report. And I'm choosing digits because I think it keeps it really simple. It's a really clean interface. All right, guys, so I've got a balance sheet here. I'm in digits. You just go to financials and you start over here and click on balance sheet. It's very easy to navigate. So let me blow this up a little bit so it's a little bit more legible. Okay, so like I said, you're always going to kind of have those same accounts. You're going to have those assets. You're going to have things like your accounts receivable. And this can look a little overwhelming if you're not super familiar with accounting and how these things are laid out. But just know the top portion of your balance sheet is always going to be assets. The middle portion is going to be your liabilities, maybe things like AP, things that you're going to have to pay very soon, credit cards, and then maybe if you've got some other liabilities or accrued expenses like payroll expenses, and then your equity. This is a very, very simple balance sheet just because it's a demo company. We can make it even more simple by just doing 1 month and saying this is where we stand, or we can kind of make it look a little bit more complex and looking at the last 12 months to see how things have moved. But overall, assets, liabilities, super simple. Let's do the profit and loss. Same thing, you're gonna have revenue up top. Give me 1 second, let me alter these and set a new filter. All right, I went ahead and pulled in the last 12 months in this demo client. So this is gonna be the same thing to where you're gonna have your revenue up top, and then you're gonna have your direct cost, your cost of goods sold, or cost of revenue is typically what it's called. Then you have your middle, your gross profit, your operating expenses are gonna be reducing that gross profit here, and it's gonna start to kind of tick away and reduce that gross profit until you're left with net profit. That's down here, net operating income. So, and then anything else is like any taxes or interest expense or anything like that is going to get pulled from that. But you can see there are a ton of different charts here on this profit and loss. Everything from travel and entertainment which has several subcategories, which I want to talk about. Professional fees, consultations, everything in here. And this has been set up for this business. If you're a cleaning company and you're cleaning in Houston, Texas, for example, you're probably not going to have a ton of airfare and lodging and meals and stuff like that. And so your chart of accounts, you won't have to have that on there, simplifying how your business financials are presented. And this is super important. It's a like step one. And I feel like tons and tons of small businesses that I see, that I work with day in and day out, miss this type of just introductory step. So here's a good example under operating expenses, because I do want to cover the difference between a category and a subcategory. So if I collapse this, it all rolls up. Payroll expenses encompasses salaries, employee benefits, and employer payrolls. But if I collapse it, it all just rolls up to the 464. And so that's the sum. Each subcategory is the sum of its parent category. And while that seems very self-explanatory, you don't know unless someone tells you, or you don't know unless you sit here and you've calculated these out. I've seen it time and time again where someone's trying to figure it out and they'll sum all of these and then they'll sum the total on accident, and just little mistakes like that. So here we can collapse travel and entertainment. We can collapse all of these to really showcase how the business is performing on its like core assets. So you can collapse everything that has a drop down or that little indent, and that's the operating expenses. And see how little data we have left. We're able to much more easily analyze how the business did by looking at all these. But if you need additional details and say, well, what did I spend on my supplies and materials, you can drop it down, computer and office supplies. So while that's great, and many people have seen a profit and loss, let's jump over to the accounting portion of it, and where I think Digits does a really good job of it. And so this is called, in a lot of accounting softwares, your chart of accounts. This is called Category Manager in Digits. And you can see here, just like whenever I was showcasing that balance sheet, it's gonna be set up in a very similar way to where you're gonna have your assets, your bank account, any current assets, things like that. And then you're gonna have that second portion of that balance sheet, which are your liability accounts, the things that are reducing the assets to give you your equity. And I really like how they set this up, honestly. So here you've got your equity. It kind of flows through how you would expect that report to look. Same for the profit and loss. You'll have your revenue, your cost of revenue, your operating expenses, your meals, professional expenses, things that are going to reduce that gross profit to give you net profit, other income, other expenses. So it does a really, really good job. But what if I'm that cleaning company? Let's hit new category over here. Category name. So let's call this chemical expense. Just because I misspelled that. That's my fault. Chemical expense, because I'm a cleaning company. So add, and then do I want it to have a parent category? Yeah, I do. And I'm gonna actually, instead of trying to type one up off the fly, let's put it under office expense, for instance. So I could just put it under office expense here, office supplies, maybe it's Windex or something for this instance. I'm just trying to come up with something that's already got a category out there. Office supplies, put it under supplies and materials, essentially, is what it is. Account name, description, glass cleaner, and stuff to clean the bathrooms in the office. I don't know. I'm just kind of making stuff up. And then let's see. We're going to go ahead and put that category name back. So chemical. I misspelled it again, guys. Chemical expense. Okay, we'll click add. Oh, it's under office supplies, and then we'll click create glass cleaner. And so now, man, you have to be spending a lot of money on glass cleaner for it to deserve its own spot on the profit and loss. But that's basically how you would go in and make that. So you can see here, it rolls up under supplies and material. It rolls up under office supplies. But let's do one that more people are probably going to make. So let's make a new bank account. So activate, select or create new. Let's see. Let's call this Chase Bank account. Select the parent account. Parent account is going to be under assets, or if you want, you can make it a subcategory of a subcategory. So assets is the parent account, and then you've got a sub account called bank accounts, I think it actually would probably better be there. A lot of people have their operating account as 1000 for the category number. But I'm gonna leave this blank in this instance, and then description, new operating account, something like that. Okay, new operating account, and I'm a stickler for punctuation, so we're gonna get that corrected and hit create. All right, and it should drop down as a sub of a sub here on that top category when it refreshes. So new Chase bank account, new operating account. I mean, it's that simple, guys. And like a lot of business owners miss stuff like that. So if we go back, let's say I don't want to make any more. If we go back to that chart of accounts here, that you can also filter down for different types of accounts. You can do, if you just want to look at your revenue accounts, you can say, oh, well, maybe I'm opening up a new revenue stream for my business. It's very easy to see what you have the option to add. So, hey, maybe it doesn't really fit under sales revenue or subscription revenue. Maybe this is service revenue because I am consulting and I'm now offering consulting services for my software, for instance. And so you can book it there. Or if you need to create other expenses, or operating expenses. And let's say you want to kind of detail out your payroll expense a little bit more. Maybe you want to track salaries between marketing and engineering. Well, you could create two sub accounts here under the salaries window, one called marketing, one called engineering. Map it in Gusto, map it in ADP, map it in however you've got, whatever your software of choice is for payroll, plug it here, and away you go. And look right here, guys, it even gives you the options to showcase, hey, these accounts are connected to third-party softwares, probably via API. So you know that these accounts are being populated by a different software. I bet if we go to the asset here and look at Mercury, yep, there it is right there. Mercury, Stripe, and Gusto are all working from this checking account. So overall, a very, very intuitive software. I would call it a smart chart of accounts. It's a really good way to have clear reporting to kind of understand how your balance sheet is set up. I can't tell you how many times I have been working in a company where they just continuously add accounts. And so when you're pulling a profit and loss, there are quite literally 200 expense lines because no one's gone in and cleaned up these old accounts. Or maybe they needed it for a one-off transaction and it was $100 one month 5 years ago. And that's the only thing that's ever sat in that chart of accounts, that GL expense account. And so now, anytime you pull a profit and loss, that line stays. It's just, you don't know if you don't know. And so I think you guys are on a good first step of watching this video to understand why this is important, to make sure that you don't find yourself, whenever you're pulling your financials and whenever you're pulling those reports, that it doesn't get clunky and that it doesn't get overwhelming. Because if you were to take a profit and loss for a restaurant that had 200 line items on it, most of which were dated or incorrect, it's overwhelming, it's unnecessary, it pollutes the water in terms of clarity. It's not necessary. So keep these chart of accounts clean, guys. It'll make your life that much easier. Use a good software like Digits that can kind of cleanly lay it all out, that's intelligent, that shows you what connections there are, that allows you to do things like bulk imports, and utilize the software for what it was meant to be utilized. So overall, guys, I hope you learned something. I hope you're thinking about, upgrading and improving your business to give you your time back. And I hope this video helped. And I'll see y'all on the next one.